Hello guys, myself Anshuman Jaiswal welcome you all in my Commerce Gateway classes. In today's lecture, we are going to study two things, that is treatment of sale of an asset in depreciation accounting and treatment of profit and loss on sale of an asset in depreciation accounting. So let's get started to our video. So our first treatment is treatment of sale of an asset in depreciation accounting. So you can catch to the journal entries that while preparing the journal entries, the following entry we pass with regard to the sale of an asset, that is bank account oblique cash account debit to asset account credit. Why do we follow this entry? Because according to the rule that bank and cash, that is if we have check is coming into the business or cash is coming into the business, so the rule for journal entries with regard to it, debit what comes in, so cash is coming into the business and credit what goes out, so asset is going into our business. So the entry will follow this bank account oblique cash account debit to asset account. But while preparing the asset account, we will record on credit side. The value of sale. So this we will do while preparing an asset account, while solving the transactions related to sale in depreciation accounting. First treatment is completed. Second treatment, that is treatment of profit on sale of an asset. While we are selling an asset, the entry we do for profit is that we credit the profit. Why we credit it? Because according to the rules for the journal entry, it is that credit all incomes and gains. So that is why in journal entry we credit profit on sale of asset. But when we will prepare an asset account, then in asset account we will debit profit and loss, and here we will write profit. So this is the concept of profit on sale of asset in depreciation accounting. Hope so it is clear to you. And our third treatment is treatment of loss on sale of an asset. The normal journal entry we do regarding loss on sale of asset is that we debit loss on sale of asset. Because the rules regarding to it is that debit all expenses and losses. Whatever expenses and losses we are bearing, we have to debit in journal entries. And while recording an asset account, while preparing an asset account, we will credit it, that is by profit and loss account, and here we will write the value of loss. So hope so this concept is clear to you. Now we will take in practical questions. We will do some practical questions to make it more clear to you. So let's get start to a practical question. So we will take very simple practical question. But one thing I forgot to tell, you have to make it clear in your mind that the depreciation will be calculated up to the sale value of asset. Now the meaning of this is that, for example, if I purchased an iPhone for rupees 10,000 on 1st of April 2020, and after 2 years I sold iPhone on 1st of May 2022. So the depreciation will be calculated from 1st of April to 1st of May 2022 at the whatever rate it is given. And if suppose I purchase an iPhone on 1st of April 2022 and I sell an iPhone on 1st of April 2022, then no depreciation will be charged with regard to it. We will simply deal with the profit and loss of it, because on 1st of we are calculating, we are applying the sale value on the date and on the month at which it is purchased. If it is afterwards, if it is not on April, if it is on May, June, July, any other month, then we can calculate it very easily depreciation. But 1st April, the month should not be same, that the book value as well as the sale value at which it is purchased. Hope so it is clear to you. Now we will take a practical illustration to make it more understand to you, or make it more clear to you. Now, our question number 1 for depreciation is first question. Wait children, let me see the question and what is the question. So, the question is, on 1st of April 2018, ABC Limited purchase machine. I'm writing the short form, that is P full form is purchase, for rupees 1 lakh. On 1st of July 2020, the machine purchased was sold for rupees 50,000. Okay students, and depreciation charged at the rate 10% per annum, and books are closed on 31st March every year. So prepare machine account. So as you can see the question is very simple. So let us try to do it. You can pause the video and take the, or you can pause the video, or either you can take the screenshot of the question. So I am going to do the solution for it. So first we will prepare machine account. Debit, credit, date, particulars. I'm writing with blue pen. Amount, date, particulars, amount. So children, when we are purchasing the machine, on 2018, 1st of April. So whenever we are purchasing the machine, we will write here the payment here. So to bank account, it will be rupees 1 lakh. So after 1 year, the depreciation will be charged on the cost of the machine, that is 2019 31st March by depreciation account. That is 10% of 1 lakh, it will be 10,000. It's very easy, you have to just calculate it on the original cost. Now, the balance carried down on 31st March will be 90,000. So, now we can total it, we will get 1 lakh. Now, this balance carried down will be brought down in the next year, 2019, 1st of April. To balance brought down 90,000. Again, for 1 year, again after 1 year the depreciation will be charged. So 2020, 1st of April. 2020, 31st of March. By depreciation account. Again it will be 10,000 and the balance carried down will be 80,000. 80,000. So it will be 90,000 here and 90,000 here. Now again this balance carried down will be brought down. So 2020, 1st of April. To balance brought down. So the balance brought down will be 80,000. Hope so students the concept is getting clear to you. But in this date, now let me see what is the month at which we are selling the asset. It is 1st July. So 2020, 1st July, we will record the sale value here because the cash is coming or the check is coming into the business. So we'll record it on the credit side. We will write here sale value, that is at which value we are selling the asset. We are selling it at 50,000. So when we are purchasing the asset, we have purchased the asset on 1st of April. That is cost is 1 lakh. So 1 lakh and the rate 10%. And for how many months? As I have already told that depreciation will be charged up to the sale value of the asset. So from 1st of April to 1st of July, the depreciation calculated will be for 3 months. So 1 lakh, 10%, and for 3 months the depreciation calculated. It will be 10%, 1 by 4. So it will be 2,500. So we get the depreciation value, that is 2,500. So we can write here 1st July by depreciation account, it will be 2,500. Now the book value of asset account is 80,000 and the sale value including depreciation is 52,500. So actually we are incurring the loss. So we are incurring the loss of how much amount? Let us see. So loss we will record here. So by profit and loss account, it will be loss. So you can calculate it here. 80,000 minus 52,500. So 500 here, 927 here. 9. So that we are incurring the loss of 27,500. So 27,500 will be recorded over here and we can balance it. So we get our answer. Hope so the first question was very easy and it is clear to you. Now we will move on to the second question and it is quite similar to it. So our question number 2. So let me see that what is the question number 2 it is. The question number 2 is on 1st of April 2016 van 1 was purchased for rupees 60,000. Van 1 was purchased for rupees 60,000 and spent rupees 5,000 on installation. So the original cost of the van will be 65,000, not 60,000. As I have already told you that how to calculate it. You can go to my previous video and see. So moving on to the next part on installation. On 1st of October 2017, van 2 was purchased, means additional van was purchased for rupees 70,000 on 1st of April 2018. 1st of April 2018, van 1 V1 or van 1 was sold for rupees 45,000, and on the same date, that is on 1st of April 2013, van 3, means additional van, one more van is purchased for rupees 1,70,000, and depreciation charge at the rate 10% per annum. Okay students, so books are closed on 31st March every year. So show van account from 2016 to 2019. For 3 years you have to prepare the van account. You can take the screenshot of the question or pause, or you can write the question. So we are going to make the solution for this question. Okay, so again we will write here first van account. We will write here van account. The format will be same: debit side, credit side, here it will be date, particulars, amount, date, particulars, amount. You have to draw the line, as I forgot to draw in the previous question. So whenever you make an account, you make in a proper sense, otherwise your number will be deducted. So we are purchasing the van on 1st of April 2016. 1st of April, we are purchasing first van. So we are making the payment through bank account. So the value of the bank, so the amount of the bank, the amount of it will be 65,000. 60,000 is purchase price and 5,000 is installation charge. So the depreciation calculated for 1 year will be 10%. So 2017 31st March by depreciation. So depreciation will be 6,500. 65,000, 10%, 6,500, and the balance carried down on 31st March, it will be, as you can see, 6,500, so it will be 59,500. 59,500. Now we'll close it and we'll get the total of it. 65,000. Now the balance carried down will be brought down in the next year. 2017, the asset account is prepared for 1 year. We have to prepare it for 2 more years. So 1st of April, to balance brought down. So the balance brought down will be 59,500. Let me check that whether adjustment is made in this transaction in this year or not. On 1st of October 2017. On 1st of October 2017, we are purchasing one more van, that is to bank account. If you are getting confusion, you can write here V1, you can write here V2, means van 1, van 2. So the cost prices of 70,000. 70,000. So the depreciation will be calculated very easily. So 2018, next year, the 1 year the depreciation will be charged. So by depreciation, now we will charge depreciation of two vans. First original van, that is 6,500, and second van, that is 70,000, 10% 7,000, and from October to March it will be 6 months, so it will be 3,500. So the total amount of depreciation will be 10,000, and now we have to copy the balance of it. So the balance carried down will be 59,500 minus 6,500. So it will be 9,653,000, and 70,000 minus 3,500. It will be 66,500. 66,500. 59,000. It will be 58,500. 65,000 minus 6,500. It will be 6,500. 14. Sorry. It will be 58,500. 58,000. Here we can write here 58,500. So it will be not 58,500 minus 6,500, 52,000. It is a silly mistake, so you can calculate it. So the total we get it 1,18,500. You can total it and we will get 1,28,500. 1,28,500. Now the balance carried down will be brought down in the next year. Now we have to prepare an asset for one more year. 1st of April, two balance brought down. So the balance brought down for first machine will be 52,000 here. Second, 66,500. Now let me see that whether in this there is any difference or not in this year. On 1st of April 2018, the van 1 was sold for rupees 45,000. Means in the same day, in the same year, the van 1 is sold. Means the van 1 is this 65,000 and we're selling it 45,000. So we will write here for sale value by bank. Sale value we will write here 45,000. No depreciation will be charged, as already told that we are purchasing it on the same date. If we purchase it on May, June, July, then the depreciation will be charged. So otherwise no depreciation will be charged. So we will write here 52,000 is the book value, we are selling it at 45,000. So it will be loss on sale. We will write a profit and loss. Loss, that is loss will be of 7,000. So hope so students, concept is clear to you. So we are not charging any depreciation. Now on the same date also, might be, yes, on the same date, that is on 1st of April only, we are purchasing van 3. So we will write here to bank V3. Here it will be write 1,18,500 and here it will be 1,70,000. So now the depreciation calculated will be for this two machine, that is this two van, that is van 2 and van 3. We are not calculating the depreciation for van 1 because we have already sold it. So by depreciation account, so it will be how much? 7,000 van 2 and it will be 17,000 van 3, because we are purchasing it on 1st of April and it will be 12 months. So it will be total 24,000. Okay students, hope so the concept is getting clear to you. Now moving on to a balance carried down. So the balance carried down will be 66,500 minus 7,000. It will be 53,500. 5366 minus 7,000. It will be 59,500. Sorry, 59,500 and again 766 and again 1,70,000 minus 17,000. So it will be 1,17,000, 1,53,000. 1 lakh, so we will total it, we will get 1,53,000 and 1,59,500. So it will be 500 here, 9, 3, 12 here, 5, 5, 10, 1, 2,12,500. 2,12,500. So when we will total it, we will get the both sides equal. So here it will be 8,500, 178, 2,88,500, and here it will be 2,12,500 and 24,000. So 24,000 it will be 500 here, 426 here, 2,36,500 and 53,000. 638 2 263 9 2,89,500. Wait children, there might be mistake any. 45 and plus 7, 52,000. It is 52,000. So we will get our answer 2,88,500 here also. So our equation gets balanced. Hope so students the concept is getting clear to you. If you have any doubt, you can comment and ask me the question. So now moving on to our last question, that is question number 3 of this topic. So our last question is very much lengthy, so it will take time, but we will try to complete it. So last question, that is question number 3. So the last question states that Ramya Limited purchased T1, that is truck 1, on 1st of April 2015 for rupees 60,000. On 1st December 2016 purchased T2, that is truck 2, another truck for rupees 30,000. The next part of the question is, on 30 June 2017 T1, 30 June 2017 sold T1, that is truck 1 was sold for rupees 36,000. 30 June 2017 on the 30th June. Okay, 30th June 2017 truck 1 was sold for rupees 36,000, and on the same date, that is 30 June 2017 T3, that is truck 3, one more truck was purchased for rupees 80,000. Truck was purchased for rupees 80,000, and on 1st December 2018 truck 2 sold truck 2 for rupees 26,000. So many complications is there, so many ups and downs is there is a question. So the question is very easy, it will be quite simple to calculate it. Just adjustments is there, no other thing is there. So the depreciation charge at the rate 10% per annum, and books are closed on 31st March every year. So the question is stating that prepare truck account till 4 years. You have to prepare it. So the question is very much simple. You can take the screenshot of the question, or you can pause the video and note it down. So I am making solution for it. So let's get started. So we will write here truck account, debit aspect, credit aspect, date, particulars, amount, date, particulars, amount. So now one by one step we will try to calculate the quotient for depreciation. So when we have purchased the first truck, let me see it. So we are purchasing the first truck on 1st of April 2015. So to bank account, the purchase value of the truck is 60,000. So no adjustment in first year. So after that depreciation will be calculated after first year. So 2016, 31st March by depreciation. So 10% of 60,000 it will be 6,000. So here we will record it. Now, so the balance carried down will be 54,000. 54,000. So 60,000 here will be the total value. Now, this balance carried down will be brought down in the next year. So 2016, 1st of April, to balance brought down. So the balance brought down will be 54,000. Now let us check me in this adjustment. In this year that whether there is adjustments or not. In this year there is an adjustment that truck 2 was purchased on 1st December. 1st December the truck 2, that is truck, I am writing here T1, to bank account. One more truck was purchased to bank account T2, and the cost is 30,000. So very simple, as related to previous question. So 2000, again the depreciation will be charged on 31st March by depreciation account. So depreciation will be charged for 2 trucks. First 6,000 and second 30,000, 10%, 3,000 and from December to March. How many months? December, January, February, March. So for 4 months it will be calculated. So we will get the value 30,000, 10%, 4 months it will be 1,000. This 3 times and 1,000. So here we get the total of depreciation 7,000. Now the balance carried down will be 54,000 minus 6,000, 48,000, and 30,000 minus 1,000, 29,000. So it will be 77,000. 77,000. So 84,000 here, 84,000 here. You can total it. 77 plus 7, 84, and 54 plus 30, 84. Now the balance carried down will be brought down. 2017, 1st of April, to balance brought down. So the balance brought down will 48,000 here and 29,000 here. So it will be 77,000. Next adjustment on this year is that on 30 June 2017 we are selling first machine. So 2017 we will write here, and on 30 June we are selling first machine, that is this machine is going to be sold. So by bank we will write a sale value, that is we are selling it of 36,000. So depreciation will be calculated up to the sale value. So the depreciation will be by depreciation 60,000. You can calculate over here. 60,000, 10%, and April, May, June. For 3 months the depreciation will be charged. So it will be 1,500. So we get the value of depreciation, that is 1,500. So the book value of depreciation is 48,000 and we are selling it at 37,500. So it is a loss basically. So we will write here by profit and loss. We will write here loss. Okay students, hope so the concept is getting clear to you. So we are incurring the loss of how much you can calculate it, 48,000 minus 37,500. So it will be 48,000 minus 37,500. So it will be 37,1055. It will be incurring the loss of 10,500. So we have calculated the loss for this. Now the remaining other asset will be charged for depreciation. Let me see that in in this year only we are purchasing other truck, that is to bank account truck 3, and the cost price of this is 80,000. So the depreciation calculated will be for truck 2 and truck 3, not truck 1, because truck 1 we have already sold it. So it will be 3,000 and 80,000 10%, 8,000 and from June to March it will be July, August, September, October, November, December, January, February, March. So for 9 months the depreciation will be charged. 3, 4, 2. I'm doing any mistake or what? 80,000, 8,000. June, July, August, September, October, November, December, January, February, March. So for 9 months the depreciation will be charged. So we can write here 3 3s are 3 4s are. So 2,000 we get 6,000. So we'll get 6,000 the value of depreciation for truck 3. So the total will be 9,000. So the space is not here, so I am carrying the question over. I am carrying the solution over above. So the balance carried down for 2018, 31st March, it will be by balance CD. As you can copy it, that 29,000 minus 3,000, 26,000, and 80,000 minus 6,000, so 74,000. If we will total it, we will get the value 1 lakh. We will get the value 1 lakh. So here the total will be, wait, let me rub it and write it once again. 80. So here the value will be 1,09,000 and it will be 1,57,000. 80. Wait children, let me see if it is right or wrong, as I am not remembering the value. So here the value will be, we will write here 2 balance brought down. It will be first 48,000, 1 lakh, it will be 1,36,000, 1 lakh. So the balance, now I am carrying it to the next. Now this balance carried down will be brought down in the next year. So 2018 on 1st of April. 1st of April, 2 balance reduced. So you can write here 26,000. Here you can write here 74,000. So total will be 1 lakh. Now in this question, one more thing it is stating. Now what it is? Let me read the question for you. In this question, in this year only, the question is stating that on 1st December 2018, the machine 2 is also sold. Oh, now we are selling it 2018 on 1st December. We are selling it second machine. So second machine is by bank sale value, that is you have to write the sale value, it will be 26,000. Okay students, now the second machine we have purchased it of rupees 3,000. So 3,000, 30,000, second machine we have purchased it for rupees 30,000. So 30,000, 10%, 3,000, and from April to December, April, May, June, July, August, September, October, November. So for 8 months the depreciation will be charged. So 3,000 4 2s are 3s are, so we get 2000. So the depreciation calculated will be for struct 2 is 2000. So as you can see that the sale value is 28,000 and the book value is 26,000. So we are incurring the profit of rupees 2000. So we write here to profit and loss, that is profit of rupees 2000, and no, we are incurring the profit of rupees 2000. Now the depreciation will be charged for third truck, that is 2019 31st March by depreciation. So it will be 8,000 and the balance carried down will be 74 minus 88. It will be 66,000 and we get total 1,02,000 here, and we get here 80, 60, 66, 74, 74 and 28, 1,02,000. So hope so the concept is clear to you. This was all for today's video. Next video we will be coming very soon. Till then, thank you. Stay safe and have a nice day.